if you track the machine tool manufacturing company Jyoti CNC, they have a large presence in the aerospace division. So I'll just allow you to, ponder over that stock. We have the management joining us. The company reported a very good performance in Q3. The revenue surged over 58%. Margins also improved significantly. And even in 9 months of this year, it was an 84% growth in revenues. They have a large chunk of their business that comes from the aerospace division. Parakramsinh Jadeja, who is the chairman and managing director of the company, joins us now to talk about that. Mr. Jadeja, thanks a lot for joining in. This time, just in 1 quarter, it was almost a 60% rise that you saw in revenues year on year. Can you tell us what is leading to this demand surge? Which is the segment that's doing the best for you? And what are the triggers going forward? What kind of growth can you do in FY25?
See, basically, our solid order books are there. That is, execution has started now. So that's why these numbers we are able to see it is in a much better way there. And then going forward also, this execution will improve every quarter and quarter, day on day, and numbers will improve furthermore that here.
What's the exact number? What is
particularly these are the sectors. The 2 sectors are significant in our order book also there, and that's improving. One is the aerospace and defense, and second is EMS there. So these 2 sectors are contributing in our growth journey here today.
Sir, can you give us the number, please? What is the order book right now as of today, and how much have you executed so far in this quarter? What is the executable order book over the next 12 to 18 months?
So basically, today our order book is close to 3,200 plus crores are there. And what you saw that 9 months, let's say year on year, we have made significantly close to 80% growth over here. And this quarter we have close to 377 crores has done, and the new orders also we have received close to 275 crores. So total order book today is close to a 3,200 plus crores to be there.
All right. Hi, Mr. Jadeja. Good morning and good to see you. And the 9 months are looking very, very good, and the last quarter as well is looking very, very good. But if I look at FY23, majority of your execution came in Q4, and Q4 appears to be the strongest. So what do you end this year with in terms of revenues? Point number 1. You're already at around 900 crores. So what do you end? And also, if you could tell us, your margins, gross margins, EBITDA margins, both for the quarter as well as for 9 months are looking good. What is the sustainable number?
So basically, from here, always the last quarter is a much better quarter for our kind of industries. And execution is always to be better on the last quarter. So even we are expecting the much better growth in the last quarter, year on year growth also here in terms of numbers on a revenue side. So last quarter to this last quarter is going to be a little bit better than that. And in terms of a margin is also, the execution is improving, the operational efficiencies are coming much better way. Once the top line is increasing, margin, there is still room to improve to be there basically.
So you end the year, sir, around 1,350 to 1,400 crores. Is that doable?
Well, let's say if you look at that order book and all, where we are going to do this kind of thing.
I've got the order book, sir, but 1,400 crores, should we take that? And also the margin, you're saying that things are improving. Give us a band so we'll at least have some guidance.
So we are looking towards to more and more to be efficiency to come on a operational leverage and all. So that margins are also going to be improved there.
And revenue?
Revenue also, let's say the last quarter is always a better quarter. So we are going to improve the revenue from here to furthermore 1 quarter.
Mr. Jadeja, hi, good morning.
Hi, good morning.
It's a pleasure, sir. And as an aside, I had the opportunity to use a CNC machine in a smaller setting, so it's a lot of fun. But just a quick word. What's the opportunity size? How many of these units do you make every year? A very basic question: as more and more of this stuff, right, becomes contract manufacturing, right? So not every industrial unit needs one, or every factory needs one, because a lot of the stuff is outsourced. I'm just trying to understand, is that an impediment as contract manufacturing picks up even on the electronic side, etc., or no?
Yeah, that is the electronic manufacturing side is improving drastically there.
Okay.
And let's say this quarter, it is contributed to close to 12.5%. That was earlier, it was 0. and we are looking to be this number will improve. And the year end in the next year, we are looking to be contributing from the EMS sectors close to 25% and like that. So there is a significant improvements we are seeing in terms of a number from contract manufacturers in electronic manufacturing there.
Okay. So you're saying 25% from EMS next year is the contribution. Is that going to be the fastest growing area for you? And what are margins going to look like?
No, there are aerospace and defense is a more faster growing areas to be there. If you look at that, in our order book today is close to 58% is aerospace and defense. And we are looking to be in terms of entire year execution side and in the revenue, 40% will contribution come from the aerospace and defense. Then our margins also is better there.
All right. Mr. Jadeja, we'll leave it there. Thank you very much for joining us. It's a pleasure, sir, having you with us here on CNBC TV 18.